Thank you for joining me today. I'm very happy to see you here. In the market, when trading, sometimes we look for cautionary signals. How do they help us? They help us to say whether it is too late to buy at the end of an uptrend or too late to short at the end of a downtrend. It can be in a stock or in a market. Cautionary signals could also mean resistance or support nearby. If resistance is nearby, we may not buy. If support is nearby, we may not short. Sometimes the cautionary signal comes as indecision signals. If there is one indecision, we take note of that. A cluster of that is cautionary that a trend reversal may be coming. We have such cautionary signals in Q systems both at individual stock level as well as market breadth level. We'll look at several of them today. Greetings. Welcome to my weekend market recap 23rd March 2024. I am Sagar Nandi, retired IT professional, swing trading stocks for a living in the USA market as well as India market. I use the Q systems and techniques that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably, where I combine the technical analysis with market direction analysis, sector industry rotation analysis, fundamental analysis, and sometimes even seasonality analysis. Because these analyses that I share try to combine as many forces as possible in favor of the trade tends to be truly high probability trades. These are the different Q components that I use. I will use several of them in today's session as well. All the Q components run on Metastock platform, and the technical analysis component runs on TradeStation as well. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Let's look at some of the cautionary signals now. And as usual, I will sometimes refer to my previous market recap to explain how the analysis worked out. It doesn't always work out in my favor, but it is not my job to show only profitable trades. Trading is not like that. Making loss is part of trading. I'll explain how I took the trades and why I took the trades and how am I managing them. Let's start with a look at QQQ, the Nasdaq 100 ETF. In the last market recap, we were here. At that time, we just broke below this trend line support. This trend line support was not there yet. So we had Nasdaq 100 breaking down below support at a very high price level. I explained in the last market recap that I took a bearish position in QQQ. Of course, it didn't go in my favor, it went up. Now, if you remember my last market recap, when saying that I took a bearish position on QQQ because of my bearish view, I mentioned something, and that something was that my view was QQQ would come down with a caveat, and that is the exact word that I used, with a caveat, and the caveat was that provided the mega caps don't rally upward. And that is exactly what happened. Mega caps rallied, and that led to QQQ moving up. Let's have a look at mega caps. In the last market recap, we were here. Remember, in the list of cautionary signals, I mentioned about the indecisive signal. Bullish indecision at the bottom, in this case for USA mega cap index. And that is why I shared the caveat in the last market recap that my view of QQQ being bearish was contingent upon mega cap not going up. And it could go up. I could know that in advance because of the cautionary signal from not one indecisive signal but a cluster of bullish indecisions at the low. Mega caps went up. It did not break below the trend line support. And I could anticipate that. I took the short trade, but I didn't take a large size position in QQQ. What am I doing with the QQQ position? Let's look at the weekly daily chart. Remember, the cautionary signals included also this headwind possible reversal signal, a unique signal that tends to come at the very top of the recent move. I had noticed the bearish headwind in QQQ, and then we had a breakdown on this candle as I showed just now. So I took the short trade, and on Thursday when I saw that NQ, the Nasdaq 100 futures, were rallying in pre-market, I was getting ready to close the short position, provided my stop, which would be just above the recent high somewhere here, was touched, but it did not touch my stop. Where was the stop exactly? If I change to the stop signal, the stop would be somewhere here. It came very close to my short position stop, but it created something that is a bearish looking candle, and I am going to change the template again. No, not that template. Let's go back to weekly really. It created a false reversal at the very top, right at the watermark resistance. It in fact went above the watermark resistance and then came down. So I am holding on to the bearish QQQ position. If the stop is hit, I will come out of it. But the one position that I have, bearish trade on QQQ using long put verticals, that I will not have to come out because that is a defined risk strategy. I can let it play out till expiry. But the SQQQ position, the long SQQQ position, which is effectively a bearish position in QQQ, that I will come out if QQQ stop is hit. So in the example of the mega cap index, I explained two of the cautionary signals. One is the indecision cluster, If there is a bullish indecision cluster, it is time not to take short trades or be at least aware of that. And the same is true for the trend line support. If trend line support is nearby, we don't take short trades. And in the last several market recaps, I mentioned that we need at least some of these trend line supports to be broken for me to take short trades. Mega cap did not break the trend line support. Let's look at dollar index. Dollar index using weekly, daily at a glance chart. I had a market recap at this time 2 weeks ago, and right on that day I mentioned that I would not be shorting dollar because price was already below lower boundary. It was oversold, shown by the stretch band indicator, and importantly we had a bullish indecision at the low. Right on that day I said it would not be a time to short. It beautifully recovered from there. And where did it stop? Once again, the cautionary signal from trendline resistances in both weekly and daily. It stopped right at that point. Can we see other cautionary signals? Yes. Not one, not two, not three, four. A cluster of four bearish indecision at the top. That means if we took, I didn't take, I don't trade forex, but if we took a bullish position in dollar right at the bottom when it was starting to go up from below lower boundary, we would exit the long position at this point, looking at the cluster of bearish indecisions coming at trendline resistance. Now if I look at this at a glance, weekly, daily dollar index, is it bullish or bearish? It's actually neither. If we look at the weekly, the backdrop is bullish. However, Friday's candle shape is bearish, though the color is bullish. Combined weekly, daily, it is not giving me any confidence regarding in which direction I could trade it. So for dollar index, I am indecisive. Maybe slightly more inclined to take a bearish position if I just looked at the daily, but when I look at the weekly, I am reluctant to take any bearish position because of the bullish candle shape. Largely you can say it's a bullish candle shape and clear bullish backdrop color. So dollar is indecisive. And if you watch the Wednesday's Fed meeting outcome and subsequent conference of the Fed chair, you would know that central bank mentioned that they will continue with 3 rate cuts this year. That's what they are projecting at this time. Now if 3 rate cuts are projected, people would expect that dollar would come down. Of course, you could also say it was already baked into price. That could also be one view. But in any case, it is a bit surprising probably to see that dollar did not come down. It tried to come down little bit, but actually it closed higher. So that means from Wednesday, somewhere here, the Fed meeting was there. From that time to Friday's close, dollar actually went up. That is also a bit perplexing. That is adding to my indecision on a trading direction for dollar itself. And if dollar itself is indecisive, it is not unusual for the market to be indecisive. Let's go back and look at the market ETFs again. QQQ. And this is a good example. I'll also elaborate on some trading tactics in today's session. Other than elaborating on some of the cautionary signals, I will look at some trading tactics as well. The accepted approach is that when we have a trading signal for swing trading or long-term investing, let's say signal on a daily time frame, then take the trade at the close of the day as is suggested in Q signals, and some other trading systems suggest buy the next day if price goes above the high of the signal day. In Q we don't have to wait for the next day. That is the usual practice of taking trades based on trade setups. But here is one thought I am sharing, that let's say it is not a trade setup, this is not a perfect example, but it is just an illustration. Later on I'll take a real life example. Let's say we had a bearish headwind setup on this day. We didn't, of course, because it's a weekly interval, but if we had a bearish headwind setup and we didn't take the setup, what would we do at the close of Friday? It did go up from this candle's close, however, it would not stop us out, meaning that if we indeed took a short trade on this day, week actually, but on that bar, we would not get stopped out. Then are we able to buy or add to the position, in this case of course short to the, add to the short position on this candle and keep the stop at the same level, keep the target at the same level? What effectively we are doing is we are dollar cost averaging, but not so much that we keep on adding to the position even if the original position is stopped out. Original position is not stopped out, it went little back against us. Is it okay to add to the position? That is an interesting thought. You may look into your own trading, and let me share some more thought on that. Let's say we have a rip roaring bull market and we have a buy setup at this point in a stock in a clear uptrend. If it is a rip roaring bull market, then we buy the entire size at the close of the signal day and we expect it to continue to go up because the bull market will add to the rapid movement up of the stock. But if the market is not rip roaring bull market, or if the stock is not a high growth stock, and another case is when we have a relatively long bullish candle, when we have the signal day, relatively long bullish candle, then it is not uncommon to see that price comes down little bit, but not so much as to stop us out, because Q protection signal is usually safe distance away for a trade that will make us profit. So even if it moves sideways or even down a bit after the signal day, it usually tends to go up and hit the profit target before hitting the stop. Now the question is it okay to add to the position when it pulls back, but not so much that it would have stopped us out on the original position? I think the answer will be yes, and especially so if, for this example, let's say the signal day was a very long bullish candle, then instead of taking the full position, we could take half position and wait for it to come down little bit, if it comes down, and if it comes down and give us a bullish candle, not a bullish setup again, but a bullish candle. We already had the setup here. Now if we have a bullish candle, we could add to the position and make it a full position, but not if the stock goes below the stop level, then we will not add to the position. Now in which case we will take the full position on the signal day itself. That will be a case, as I mentioned, either in a rip roaring bull market or in the case of a stock which is breaking out with very bullish momentum, maybe because of some news like earnings or a major announcement, which would be true for a stock like Nvidia after its recent earnings. If we look at Nvidia, we could look at the earnings date. I don't remember exactly when the earnings was there, but even other than earnings, when there is a long-term resistance, in this case watermark resistance, and a high growth stock breaks out of the resistance with huge bullish momentum, with the parent of all bullish momentum, then we don't expect it to pull back. And in that case, we would like to take the full size position on the signal day itself. In this case, it was a breakout signal day with very high bullish momentum. So those are few trading tactics that you may consider in deciding when to take the full position upfront on signal day and when to stagger the position across multiple days. I mentioned about a real life example. Now let's look at that. Let's look at my Twitter handle, Superior Profit. This market recap may end up being more like an educational session about the warning signals as well as some tactics for trading, which may not be bad for all of us. Let's look at this. I shared a view on a stock GRFS on March 19th in the morning session, Eastern Standard Time, and I shared a clear chart. It's not a Q chart, it's a clear chart, and I asked the question, if you look at this clean chart, would you buy? My answer would be no, because there is no signal in this chart to tell that it is buy worthy. But then I shared the Q charts of the same stock. Let's look at this. Again, I'm sharing all this on 19th March before knowing the results. What I saw on that day, let's look at the cautionary signal. In the weekly chart, the bullish indecision cluster at the bottom, that was a cautionary signal for bears that the bearish move may be over, coming to an end. Not over yet, but maybe coming to an end. That was the caution from the bullish indecision at the low. We also had a false downside breakout, which is very bullish pattern in my view. In the daily, we had a trend line support. That is cautionary for what? That is cautionary for not taking shots. The price was very close to the trend line support. If you look at the magnified view, the close was very close to the trend line support. So if we took a long position, our stop would be very narrow. Any other cautionary signal? Yes, the unique bullish headwind, possible reversal signal that practically caught the very low, almost the very low of this move. Then we had other signals from big move up 3 bullish momentum that came at jump thrust low, price extreme low, resulted in this huge gap up. Let's combine the cautionary signals with the trading tactics that I explained. When the big move up 3 came, the candle already had a very large gap up move. It could be a long green candle as well. In this case, long big gap up move, either in case of a big gap up move or in case of a long green candle, it might not be wise to take a long entry immediately. Instead, as I mentioned in the tactics, you could wait for the stock to pull back and give it a bullish candle, not a bullish setup. That candle could be the headwind candle. It could also be the last candle when I shared the stock. And using the trading tactics that I mentioned, using all the cautionary signals that I explained, I took a long position right on this day. But technicals were not the only things that I looked at. As you know, I looked at the 360 degrees analysis, and the first thing that caught my attention was that the stock GRFS, biotech pharmaceutical stock, had a huge dividend of 10.8% at that time, dividend yield. It was undervalued. 72% of peer stocks were up on that day. So fundamentals allowed me to buy. The dividend allowed me to buy with more confidence. In the worst case, I could simply hold the stock for its dividend. I looked at its industry strength. It was one of the strongest and one of the most accelerating on that day. So I completed the 360 degrees analysis and I bought the stock. And as is usual, as is Q guidelines, one would put at least partial profit booking GTC order, and let's see how GRFS played out. Let's use Q Global or Metastock. The original chart that I shared was also from Metastock. They would look similar. I shared the bullish idea right on this day and I took a long position. When price shoot up on this day, my position had 12% profit. If you took the trade at different times of the day, it could be between 11 to 12%. I had 12% profit in the trade. Partial profit would be booked. Now, interestingly, very next day, it came down. But before that, I wanted to mention one more thing. On this day, what did we have? In daily at least, not in weekly, the weekly color is still magenta, but in daily, we had a flow trend following long setup that was also bouncing up from trend line support. However, remember the trading tactics I mentioned. I was already long from here, but if I didn't take a long at that point, hypothetically, looking at this bullish flow setup, would I buy on this day? One tactics is not to buy if the candle is so long, but wait for it to calm down a little bit. More often than not, it will calm down. But did it stop us out? If we look at the chart with stop signal, no, it didn't stop us out. if we treated this as a flow entry signal day, our stop would be at this point. Next day had a down move, but it didn't stop us out. So if we applied the trading tactics that I mentioned, one way would be not to enter on this day at all, or if we entered, we could enter a partial position and then add to the position on the next day, which was not a trade setup day but a bullish candle after the signal day, which did not stop us out. That way you could complete the full position. Of course, in this case, I entered the trade here, partial profit was booked here. In that case, what to do? On Friday, if I was willing, I could add to my partial position at the close. I did not. I will watch it on Monday. If it continues to go up, I will keep an eye on it using the fine-tune real-time chart, and I will buy the stock again. And if it continues to go up, I'll expect next time to it to breach this direction line and go to at least this direction line and book profit at that point. So I'll put a GTC profit booking order at this point if I add to my position. That is a real life example of applying the cautionary signals and also the trading tactics that I mentioned. You will see these patterns tactics can be applied in many stocks. Let's look at another stock that I mentioned in the last market recap. Last market recap, I was not bullish and I shared this stock MOS, Mosaic. I shared it on this day. And remember the cautionary signal from trendline resistance. We do not buy if the trendline resistance is nearby. So I shared the stock. It was a stock with great fundamentals, and I mentioned it could be bought if this trendline resistance was broken, and it was not broken. Therefore, we would not buy. Again, the cautionary signal from the trendline resistance helped us to identify a stock, add to our watch list, but not pull the trigger, not buy it unless the trend line was broken, which it did not. There are cautionary signals from breadth indicators, of course. We look at the unique Q market total view breadth chart, and I have been sharing these warning signals for many weeks now from the Hindenburg cluster, from the Bango Irrational Exuberance designed by Mr. Ian Woodward, may him rest in peace. This week we had a bullish move on Wednesday after the Fed rate decision, and this is Wednesday. It had a bullish shape candle, but the accumulation count was not negligible, not one, but not very large as well. Accumulation count was only 2. That day made a new all-time high in the market in several pockets, but we had accumulation count of only 2, and the very next day we once again had a irrational exuberance move up, Thursday, but the candle shape was indecisive. Let's look at weekly daily at a glance chart for market breadth total view. We had the cautionary signal from bearish headwind. I showed that in previous market recaps, but as I mentioned, I would need to see if the trend lines are broken in weekly daily. They are not broken. Do we have other cautionary signals now? Yes, we have bearish indecision cluster at the top. But again, unless the trend line support is broken, I am not allowed to short. So I am seeing a lot of cautionary signals, but not enough signals to be ready to short, a view that I maintained in the previous market recap as well. We saw cautionary signals on market breadth, some of the Q market breadth cautionary signals, Hindenburg, Mango, etc. We saw individual stock cautionary signals from indecisions, trend lines, headwinds, etc. There are also cautionary signals from Q edge, sector industry stock breadth, and specifically from the bucket analysis. This is a snapshot, or we can look at the live system. This is the bucket analysis from Q edge. As of Friday's close, 7.1% of all stocks are above upper Bollinger Band. 7.1%. What about the market itself on Friday? 100% of sectors, 88% of industries, 79% of stocks were down on Friday. What happened to the bullishness of Wednesday? Wednesday we had several pockets hitting all-time high, and on Friday we see everything is bearish except mega caps, of course. I will come to that, but most of markets pockets were bearish on Friday in spite of Wednesday having a new time high in several pockets. Could we have some warning signal on Wednesday? Yes, we could. From the bucket analysis, I captured a snapshot of the bucket analysis in real time on Wednesday. This is 21st March that I started Q Edge, real time updated as of 3:44 p.m. Eastern Standard Time. Market was very bullish on that day, 21st March. Wednesday, 21st, sorry, this is not Wednesday, 21st March is Thursday, the day after Fed rate decision, Thursday. Thursday. We had the warning signal on Thursday from the bucket analysis. The percentage of stocks above upper boundary in real time hit almost 30%, 29.3% in this snapshot. That would caution us that it was more likely than not, and so far I have not seen it failing many times, if at all. Invariably, the percentage of stocks above upper boundary comes down. That means a large number of stocks pull back. Do they give short setup? May not be, but at least it would help us not to take new long trades and protect profit in existing long trades. So the cautionary signal that the market was overheated from a breadth perspective comes from the bucket analysis, and it came on Thursday, which worked out beautifully because Friday market heavily came down. Now I want to go back to the bucket analysis real-time snapshot and explain some detail on how this real-time bucket is actually calculated. In the bucket analysis, we have two parts. One is the upper part that shows the percentage of stocks above mid Bollinger Band. One box is for real time and the D1 box is the previous day's picture. That way we can see compared to previous day in real time how the change is happening. We can see about 8% of stocks crossed above mid Bollinger Band in real time on Thursday compared to Wednesday's close. The second part of the bucket analysis is here, that is distribution of the S&P 1500 stocks across the bands, imaginary drawn bands between their upper Bollinger Band and lower Bollinger Band. Greater than 10 is the bucket that contains stocks above upper Bollinger Band, less than 1 stocks below lower Bollinger Band. Whenever these two buckets percentage hit 30 to 40%, around that, it is too overbought. Almost always it tends to reverse. Now, when we look at the percentage of stocks above upper Bollinger Band, we see here 29.3%. How is that calculated? The Bollinger Bands are in fact not allowed to change in real time internally in this system. So Bollinger Bands positions are fixed as of last day's position, and then as stocks go up or down, they move inside the buckets of previous day. That way, will not have a moving target, because as you know, Bollinger Bands are recalculated based on price move. If we allowed the Bollinger Bands to move for the bucket analysis in real time, that would be equivalent to a moving goalpost. We would not see the true severity of the up move or down move from the percentage of stocks in the uppermost bucket, lowermost bucket. But by holding the buckets, meaning holding the Bollinger Bands to previous day's position, we can see how extreme the moves are in real time. And after the market closes, we don't restrict the Bollinger Bands, we recalculate it. That's why sometimes you will see that the percentage of stocks above upper Bollinger Band is changed, because it is recalculated after market close using the new Bollinger Band. One statement I'll make, that whether it is in real time chart or after the close, whenever the percentage hits 30%, 40% or around that, it is too overbought for the uppermost bucket and it is time to stop buying. And if you use this unique cautionary signal, that real-time bucket analysis, you would stop buying on Thursday and you would protect profit in your long positions. And again, that would be very helpful, because Friday we had a big down move. How is the overall market for the week? We can see that from the sector industry stock advanced decline breadth. Longer term 1 month is now bullish. Longer term 10 days also bullish. Medium term this week 5 days is also bullish. But we see rapidly deteriorating signal colors, meaning bearishness coming in on Thursday and Friday together. But that is not enough to take a short trade, because we have a trend line supports in many of the market ETFs. Let's look at the market ETFs. We looked at QQQ already. SPY made a new all-time high on Thursday, but see the last two candles. Shape-wise, they are not bullish, but color is still bullish. And of course, once the market makes new all-time high, as I repeatedly mentioned, it is not possible to have a short setup for swing trading purpose. In daily interval, we don't expect a short setup when market is making new all-time high. And once again, we have cautionary signal from bearish headwinds, but will not short unless these trend line supports are broken. Support is holding very well. For DIA, made a new all-time high on Thursday. Friday's candle, that day's candle is not bullish, but we are not going to short unless this trend line support is broken in daily. IWM didn't make a new all-time high, but if you watch the market on Wednesday after Fed rate decision and Fed chair conference, small caps rallied the most. Next day it continued to go up, or at least try, created a beautiful false upside breakout. This is IWM. In fact, if I look at Q Finder, we can see real-time trade setups and signals. This is only one of the 4 market ETFs that is actually signaling a short setup. That is a box setup that is double top or kind of false upside breakout, as I mentioned, as I showed just now. That is coming at price extreme low, sorry, price extreme high. At price extreme high box short setup, that is a time in my view to look for shorting small cap stocks. Not necessarily IWM, because I see trend line support is here, but this is the weakest of the market ETFs. It has a short setup as of Friday's close, so it is time probably to look for shorts in small cap stocks, if at all you are looking for shorts. Not IWM itself, it has multiple trend line supports. Small caps small caps are definitely weaker, the weakest pocket of the market. But the trend line supports are holding in all the instruments that we saw, the market ETFs, the market breadth, total view, and also the mega cap index. That is not a time to short a lot of stocks. There is a cautionary signal that is also available, and that is very valuable, as valuable as the bucket analysis. That breadth warning comes from technical breadth from Q Finder. And this is the Friday's breadth. The warnings come from the red candle high. When too many red candle highs, meaning bearish candle at a high price level come, this cell lights up with red color. When too many bearish headwinds, the unique reversal at the top signal comes, this cell lights up with red color. So we have those two warning signals coming on Friday. That is enough reason not to continue to buy. May look to short. And again, I already showed small caps are weakest. Why not look for small cap stocks giving some of these plenty of short setups that are available. If we look at Friday's technical breadth, whether we look at all setups or strength setups or continuation or reversal, they are all bearish with huge warning coming from red candle high and also from bearish headwinds. However, the weekly picture is very bullish, and that is not unexpected. That is perfectly in sync with the sector industry stock breadth that we saw in QH. So they are in sync. When things are in sync, we may look to trade. When things are not in sync, we wait for them to sync up together. When they are in sync, it is telling, currently it is in sync, all the pictures, and they are telling that it's not the time to short, but if at all, if you are looking to short, you may look for small caps for shorting. I am actually not going to look for any short trades, but I am going to show something that I shared on Friday. I'll explain that a bit. That was unusual. On Friday, I shared this snapshot very close to the market close. In fact, I waited for the market close but just before market close. After market close, this chart is reset to its 0 point, pivot point, the market percentage chart. That's why I captured it just before market close, not for myself. I have the live systems for sharing with others. This is Friday's market, and instantly you see something unusual. If you see the previous day, Thursday here, you see all the lines are above zero line. That is bullish market. Thursday was bullish, Wednesday was bullish. What happened on Friday was very unusual, and I'll explain. It is not unusual to see that mega caps are strong, small caps are weak. That is not unusual. But the degree to which they diverged was very unusual. Mega caps were up by 1.3% almost. In fact, in the last few minutes of the market before close, this percentage went up. Mega caps continued to go up till the close. This was unusual. The magnitude that mega caps were up by 1.3 plus percent and small caps were down by 1.1%. Mega caps have a huge impact on Nasdaq futures and QQQ. So QQQ went up, but see the percentage by which QQQ was up on Friday. Just before market close, I captured this picture, 3:52 p.m. Eastern Standard Time. QQQ was up by only 0.23%. So I would hypothesize that this was closing in the green because of the mega caps going up. Small caps were down heavily. Again, that supports what I suggested earlier, that if we are looking to short, it is good idea to look for shorting small caps. The Dow Jones Industrials were also down, and notice it was down from the very beginning of the day. Small cap was down from the very beginning of the day. Mega caps were up almost from the beginning of the day, which pulled up the QQQ in the later part of the day. In fact, after 12:40 or so, only then QQQ went positive. Before that, it was in the red, and SPY was trading water. Mostly it was SPY, the green line. Mostly it was down, tried to go up and came down again, almost at break even as of this slot. So this showed that Friday's market was very bearish. If the mega caps did not help, it would have been much more bearish. And that brings me to the caveat I shared last weekend's market recap, that I was bearish on QQQ with the caveat that mega caps did not go up, but mega caps did go up. And why I came to this snapshot specifically today is that there was something unusual on Friday. The usual thing is that when mega caps keep on rallying throughout the day, it first pulls up the QQQ, then SPY, and eventually, more often than not, much more often than not, eventually before the close, DIA and small caps also participate, and they recover. If not turn positive, at least recover substantially. But that did not happen on Friday. That is why this picture is very unusual. The QQQ closed positively, SPY barely changed, and IWM did not recover at all. DIA also did not recover. That was unusual, and I wanted to share that. And whenever I see something unusual, I pause. I don't keep trading. That was another reason. That is another reason I'm not going to look for many trades today. If I see attractive trading ideas, of course, as usual, I'll share them on my Twitter or my forum page next week. I'm near 1 hour point. Remember the cautionary signals that I shared. If you understand them and use them more often than not, you will pause, not take a trade. For example, you will not buy before trendline resistance is broken. You will not buy when bearish indecision cluster is there. You will not buy when bearish headwinds are showing alert in technical breadth. Neither will you buy when red candle high is showing alert in technical breadth. And you will be careful when you see Hindenburgs and Bangos coming one after another. None of them are short setups, but they are cautionary signals and they help a lot. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session, most likely next weekend. I'll announce the date time on Twitter as usual, X now. Have a great weekend. And as I always say, as these live examples show, I believe there is no reason not to do that. Trade profitably. Thank you.